Behind the United States of America stands the world's second largest economy, China. Shrouded in a fog of mystery, shielded by the CCP and its stringent press laws, China is an unsolved puzzle for most Western investors. We've all seen the stories of strict, inhumane lockdowns, ghost cities, and disappearances, but cutting through the propaganda and finding the truth has been extremely difficult. For the past 2 years, the story was that China was failing, undergoing a massive real estate superbubble and a reshuffling of party members that made this guy president for life. And while we've seen hints of these problems enter the market, they have remained only rumors and rumblings. In the past few weeks, however, several different stories have come out that prove that China is indeed undergoing a serious crisis as we speak, one that could ultimately bleed out into the rest of the world, pushing the domino that will lead to the demise of the entire global economy. We begin with this. We know from looking at basically any Chinese stock, the country's markets are in shambles. For example, Alibaba, the famous Amazon of the East, a company once worth $842 billion, is now down 80% from its peak, valued at just $175 billion. This isn't some speculative tech stock either. This was a company that received praise from value legends like Charlie Munger and Ray Dalio. These massive losses are not just concentrated in specific stocks either. This is a market-wide phenomenon. In fact, the GXC, which is essentially China's version of the S&P 500, is down over 60% since peaking on February 12th of this year. But these numbers are not what's important. It's the response that has investors spooked. You see, China's markets have been so bad that on October 24th, its state entities ordered banks to begin buying up stocks in an attempt to essentially put in an artificial bottom via state intervention. In a Bloomberg article from the 23rd, Harris Vaughn, VP at IFAS Global Markets, stated that, quote, "The market situation currently might be the worst I've ever seen in my career. Sentiment is even worse than the 2008 global financial crises." And this market panic is starting to influence the currency markets. With so many global investors bearish on China, the yuan is taking a massive hit. It just saw its largest depreciation in 27 years. It's another victim laying in the path of the dollar wrecking ball. As noted in a previous video, as our Federal Reserve moves to increase rates and reduce the supply of dollars in the world, other major currencies are suffering while the dollar moves higher and higher. China is no exception, and despite the fact that they've been trying to reduce their reliance on the world's reserve currency, they have been unable to decouple, as evident by these recent developments. To make matters worse, it seems that the Fed isn't laying off the dollar pedal anytime soon. Cleveland Fed President Loretta Mester was quoted saying that the Fed would raise rates even in a recession and that it truly doesn't care about the damage it's inflicting on the rest of the world. The UN in a recent announcement called out the Fed, saying it should halt interest rate hikes, and in response, Jerome Powell was quoted saying our central bank does not take account of the impact its policies have on the rest of the world, but would continue to lift interest rates to bring inflation under control. This means that it's very likely the damage to the yuan will continue and the complete collapse of Chinese stocks will persist. As the market plummets and we enter historic loss territory, more and more government intervention will take place. We are already seeing this with rumors swirling about China's zero COVID policy. All signs are now pointing to a change that will see China once again open up with serious changes to its laws and guidelines regarding the strict citywide restrictions related to COVID outbreaks. As the economic situation grows more and more serious, we are likely going to see more and more attempts by central government to stop the bleeding, but if history is any lesson, we know that the more the government intervenes, the higher the chance of total collapse. One look at China's foreign currency reserves and you can see they are quickly approaching a serious problem as the depletion of dollars and other foreign reserves has been rapidly plunging. The total now stands at levels not seen since 2013. In fact, they are now well below the minimum adequacy level, a measurement created by the IMF to showcase the chances of a banking crisis. These facts, along with the expected future actions of the Fed, make for a tough future. China's largest companies are bleeding down as much as 60, 70, and 80% from their peaks. Its large real estate-driven economy is in shambles, and most importantly, its currency is taking a massive hit, forcing the government to make intervention after intervention. How it plays out is anyone's guess, but we can be sure that if the yuan continues to do this, then the chances of a massive super crisis grows larger and larger. As the world's second largest economy, this unfolding crisis would undoubtedly spread to other markets, including the United States, but finding out exactly when or how is going to be extremely difficult given the shield created by the CCP. Thank you guys for watching. As always, please make sure you hit that like and subscribe button if you enjoyed it, and make sure you drop a comment below stating what you think will happen in developing markets around the world.